preview. Yeah. So how are you using support and resistance? That's the main question. So what are you using support and resistance for should determine how selective you are when choosing your levels. Meaning that your support and resistance are for entries. So now let's see. Let me clear this off. Your support resistance are used for entries, right? They are used to find a way to enter the market. So now, if you're taking, let's look at the next paragraph here. If you're taking your entry triggers at support and resistance level, you should be more selective. Only mark significant support and resistance zones that are likely to hold liquidity. Now, there's a way for you guys to understand this better. So now, the example I'm going to use for you on zones that are likely to hold liquidity are what we are going to call our psychological levels. So now, when you're using support and resistance, you're supposed to these zones called psychological levels to like mark out your significant zone. Like psychological levels are significant. Allowing that, please kindly mute. Support. Your psychological levels are your significant support and resistance levels. How and what is your psychological level? How do you identify them? How do you identify your significant support and resistance level? So, right, we are going to head over to baby pips and baby pips would come. Let me show you guys the meaning of your psychological levels. So let's search for it together. Psychological levels. So now let's see. Let's see here. What are psychological levels and how do they work? Let me see. Is this a clean, what's it called? It's a clean explanation. I don't think so. Let me look for a more defined meaning. There's a way I'll explain it to you guys. I just want to use a clear definitions. So as you can see, you can find more information on baby pips. Do you get? So if there are some meanings you don't understand, go and do your own research. Do you feel me? Do your own research on what these levels are. So okay, cool. So now I hope we are all together. So let's read this together. Psychological levels. In technical analysis, like this. In technical analysis, a psychological level is a price level that is perceived as significant by traders, often due to its round number or because it's previously acted as a support or resistance level. Now, these levels are not based on any inherent fundamental value, but rather on the collective perception and behavior of market participants. Now, what do they mean? For example, let's say our psychological levels are whole numbers. So let's say now, everything we are doing in trading, we are doing it with price. You can see this is my trading view charts where I have my candlesticks, and right on this side where you can see me drawing this box, you can see a set of prices right here. Now, these prices are our concentration. Do you understand? All we are doing in technical analysis is on this chart, this price chart, is looking for a way to buy, a point to buy or sell, meaning what price to buy or sell from. So to find out our significant support and resistance level, meaning finding out our significant zone, to buy, our significant zone to buy or sell from, we have to have an idea of zones that are mostly respected. Now, psychological levels are whole numbers. For example, when you go to a bank, do you understand? Let's say you walk into a bank right now and you want to withdraw money from your bank account. The money that the banks are going to offer to you is not going to be anything less than a whole number. Let's say the bank cannot just withdraw for you to you 500 naira. No, they have to start from like a round up number like 1,000 naira because that's our currency. 2,000 naira, that's our currency. 3,000 naira. Sometimes they may do 3,500 naira. Do you understand? But they cannot give you 3,528. No, that's not round up. You round it up to a figure. Now they round it up like that. That's how they round up numbers at the bank. So psychological levels are literally levels where these big banks look to place their trades. So now let's see it. Now let's finish the last paragraph. These levels often refers to as invisible lines, often influence both individuals and institutional traders. Let me highlight this. These levels often referred to as invisible lines often influence both individual and institutional traders. What do they mean by individual traders? Individual trader meaning you and I that come to the market each day. Institutional traders meaning that these big banks, these people who put their real money, these people who their money move the markets in the financial market. You get what I'm saying? So now they are the institutional traders. So leading to predictable pattern in price action. So that's where we are expected to like put our levels because price tends to respect it very well. So when you're looking to plot significant support and resistance level, like it says here in this PDF, their levels only mark significant support and resistance zones that are likely to hold liquidity. Now, I've backtested and I've seen that these psychological levels hold liquidity, they hold money, they are always respected. Now, I'm going to teach you guys on how to properly mark out these zones before I will then move into support to resistance and resistance to support. So let's move. So now let's see. Now, what are psychological levels? Psychological levels are price points in financial markets that hold significant meaning to traders and investors, mainly due to their simplicity and ease of remembrance. Now, typically, these levels are round up numbers ending in 00 or halfway points like 50. With currency pairs, the exchange rate of 1.0 or party is also a big deal. Traders tend to anchor their decision around these levels, leading to increased buying and selling pressure when approach or surpass them. So now let me explain that English to you. So now in trading, everything we do is based on human behavior, based on how we all think in the market. Now you look at this chart here on my screen. Let me show you guys. When you're looking at it here, we have the GBP USD chart right here. And now the way you are going to be able to like understand how to plot the levels is when you can actually calculate pips. And I'm sure, did I teach you guys how to? I think I taught you guys how to calculate pips. Or probably I'm gonna check. Well, that should be reversed in the curriculum. But let's see. So, for example, let me
No, you didn't.
I did not, all right.
You did not. You did not.
Let me take that right now with you guys. So, for example, now look at where price closed. Look at this green candle right here, this green zone here, right? Price closed at the current market price that the market, because we are closed currently for the week. The current market price is 1.27372. So now, how do you calculate pips on? How do you calculate pips concerning this point now? Now, in pips calculation, you are supposed to start calculating from the fourth decimal place. In pips calculation, you're supposed to start calculating from the fourth decimal place. And what do I mean by that? So now we have our GBP USD current price equal to, this is our GBP USD current price. This was equal to. Now the GBP USD current price is 1.27372. Cool. So now how do you start calculating pips in what's it called? In GBP USD? Now let me make something clear to you guys. So we know that in trading, what we trade as financial traders, forex trader, we trade currency pairs, right? Now, since what we trade is currency pairs, and we understand that two currencies coming together is what forms a pair in forex, right? Now, and we know that we have several currencies. I've given you guys example of types of currency pairs we trade in forex. So let me use the GBP USD now that we are currently on as an example of a currency pair. So now GBP USD, we have two currencies there. We have the GBP, which is the British pound, right? And we have the US dollar, which is the United States dollar, right? Now they came together. That's how we came about to have. Sorry. I'm not supposed to bring out my notes. Oh, fuck. Okay, so I think I'm going to cut that part out. So right here, we have GBP USD, meaning two pairs, two currencies, not two countries. Sorry, this stuff is autocorrecting. Two currency coming together is what forms a pair in forex, right? Now we came about GBP USD. I believe you guys understand how we have GBP USD now as our currency pair, right? Please, if you don't understand, let me know. If you understand, let me know so I can move forward to teach you guys on how to calculate pips.
Repeat.
I should repeat what actually?
The how you got to like currency pairs.
Okay, let me take it. Now, like I said right here, what are currency pairs?
Apa, your smoke.
Ha, please turn it off. So now, like I said, currency pair is what we trade in forex education. Now, two currencies coming together to form a pair, right? Now, for an example, our first currency here being the GPP, as the first currency, right? Our second currency being the US dollar, right? Now, when they come together, they give us the pair we have to be as GBP USD. Let me use another example. So let's say we have the US dollar, the USD, which stands for the United States dollar. We know that the currency that is spent in in US is United States dollar, and then we have the JPY. JPY stands for Japan yen, because the currency that is spent in Japan is yen. So when these two come together, US dollar and the JPY, we now have a pair called USD JPY. Now let me search that. I'm going to go in my search box. I'm going to search USD JPY. You can see it. This is a currency pair right here. You can see. Emmanuel, I believe you understand that now. Can I move forward?
Of course.
All right, good. So back to GPP USD. So now, the current price of GBP I'm teaching you how to calculate pips now so that you can be able to learn how to properly calculate your psychological levels. Do you understand? So now, the current price right here of GBP is 1.27372, right? And I'm still going to go check the current price of USGPY and use that for my second example because now I have to let you guys understand how to calculate pairs, how to calculate pips on pairs that are non-JPY, meaning that they are non-Japan yen. Do you get me? Because there's a particular way we calculate pips that are only correlated with the Japan, with the JPY, with the Japanese yen. Do you understand? There's a particular way to calculate pips, meaning that the US dollar yen and the US dollar, and there's a particular way to calculate pips that are for just Japan. Do you get what I'm saying? So this is one, and this is two. How to calculate pips that are JPY, meaning that they are yen. You understand? How to calculate them. You have to have an idea of how to calculate them. So when you have an idea of how to calculate these things, you have an idea of how to properly figure your psychological levels out. So now, how do you calculate pips that are non-JPY? I mean that they have no Japan in it. For example, this GBP USD doesn't have JPY as a pair. So we are going to be calculating it on how to calculate pips that are non-JPY. I believe you guys are following me. So let's proceed. So I said that the current price, let me move this down here. The current price of GBP USD right now is 1.2732. So how do you calculate non-JPY pips? So the fourth decimal place, the fourth, sorry, the fourth decimal place is what is known as one pip in the calculation of
Hello.
which is your non.
Hello.
Yeah, I'm listening to you,
I
Piers.
just remember. Just remember. Can you hear me?
Yeah, I'm listening.
I just remembered. You've taught it before.
I've taught it before, right?
Yes.
But let me take it again so that those who are going to be watching the video are going to like take their time to understand how to perfectly calculate these psychological levels that we're talking about. So now, so the four decimal place is what is known as the one pip in calculation of US dollar, which is the non-JPY. Kindly mute yourself after, let me know your opinion. Thank you very much. So the current price we have right here, we have our first, from the first decimal place, we have 27372. So now the four decimal place here will be from this seven. This seven will be our fourth decimal place. So now this is where we start to calculate our one pip from. So our one pip, for example, let me move this closer. For example, our one pip here, 1.2. So we don't care about the numbers after the four decimal place. That number after the four decimal place can just be an addition. You know what I'm saying? Can just be an addition. So 1.27372, yeah. Now, since we are starting to calculate our one pip from there, if we are going to have plus one pip, meaning that if price is moving one pip more, we're going to have plus, let's see, 10. Do you get what I'm saying? So now our equal to is going to be 1.27382. That means price just moved what? price just moved 1 pip. You get what I'm saying? Price just moved 1 pip. So now that's our 1 pip in that correlation. Let me use another example. So our next what's it called? Our next level of, let's say if we're going to add 1 pip more to it, we're going to be having let me type it out. You're going to be having plus 10, which is going to give us 1.27392. Do you get? So now that will be our new price. One price moves 1 pip. So now pips is how we calculate our dollar value in the market. So when price moves 1 pip, right? And probably the lot size you're using is equal to it. I'm sure I've explained, because I explained about lot sizing and how to use lot sizes in my first video. That's my basic terms and forex basic terms and their understanding. You get me? So now this is when you're doing 1 pip. The 1 pip starts from the what? It starts from the fourth decimal place. Starts from the fourth decimal place. So now our 10 pips starts from the third decimal place. The third decimal place, for those of you guys that don't know how to calculate pips, the third decimal place is what is known as 10 pips. In the calculation of US dollar non-JPY pairs, like that and like that, the third decimal place. So let me show you guys. So now, like we said here, our current price right here is 1.27372. So if you are supposed to calculate plus 10 pip, our new price will be, so from third decimal place, going to start from here. Right. So now we are going to be having 1.27472, meaning that price just moved what? Price just moved 10 pips. That means price just moved what? 10 pips. So here, our fourth decimal place, which is this point, is where you start to calculate from, right? Fourth decimal place, which is this point, you start to calculate from. Now, right here, 10 pips, the third decimal place. Count it after decimal. 1, 2, 3. That's why I put my what? My 10 pips calculation. Let me use another example. So now this is the new current price, right? This level here, this 1.74. So now if price was to move another 10 pip, you're going to have we're going to have, let's see, plus, I'm not supposed to be taking guys on this stuff, but for Ayo that just joined, I want him to like follow through and understand. So the third decimal place is where we're going to start from. So 100, right? That's where we're going to start. Our new price is going to be 1.27572. I'm sure you know how to do mathematics calculation. See, 27472. 0 plus 2 is 2. 0 plus 7, 7, 1 plus 4, 5, 7, and like that. That's how you get your 10 pips calculation on pairs like this. Do you get? So you can see that's the third decimal place. So now, the second decimal place is where you count your 100 pips. Why I'm taking you on this is because I want you to know how to perfectly plot your psychological levels. Now, since I said psychological levels are round up numbers, and the current price we currently have right here is 1.27372, I'm going to show you how to calculate pips, how to calculate the pip on what's it called? On GBP USD, so that you can go and start practicing on ways to calculate it on other pairs. So let me move forward. Now, the second decimal place is what is known as 100 pips in the calculation of US dollar non-JPY pairs, meaning that pairs that don't have the Japan as a correlation pair, how to calculate them. That's what I'm schooling you guys on right now. So let me put this here. Let me move it a little bit up. So, right. So for you guys that are going to be watching this video later on, do yourself some good. Even after me teaching you, go on your own, go online, learn how to calculate pips so that you get good at it. So let me show you now. Like I said, we've dealt with the fourth place, knowing how to calculate 1 pip. Do you guys understand? Kindly let me know so I can move forward to the other parts. Do you understand the first, what's it called, the 4 decimal place and the 3rd decimal place? So I move to the 2nd decimal place, please.
Yes.
Uh, all right, thank you very much. So let's get back to it. Emmanuel, I'm sure you understand that too. So we've dealt with 4th decimal.
Yes.
All right, thank you. We've dealt with 4th decimal place and we've dealt with 3rd decimal place. Now the 2nd decimal place. So now we know that our current price is 1.27372, right? Now, our 2nd decimal place should be where that 7 is starting from. So that's where we are going to add our pips to our 100 pips. So now, plus like this, that's where it is going to start from. Like I told you that your anything outside from this, what's it called? 40th decimal place, use this 7 here. You forget about it when you're doing your calculation. But it's still important due to the fact that there's what we call pipette. There's pip and there's pipette. But pipette are not really important because they don't really hold much value. So your main focus should be how to calculate pips, literally. So now let's calculate this together. 1.27372. When we add it, we have 1.27372. Now let me show you guys. 872, 872, 837 rather. Okay, good. That means if price have moved what 100 pips. If price moved 100 pips. I'm going to show you a chart example on how to get it and what I mean. So now price has moved 100 pips. If price moves 100 pips from this current market price, like this, if you move 100 pips from this current market price, we are going to have what? We are going to have this as our new price, right? That's going to be our new price. So now, if you're going to add another 100 pips, you're going to have 10, 10. So we're going to move this right below here. You can take notes. Also, advice most of the time, take notes. You understand? Because it helps. So 1.29372 will be our new current price. If market moves another 100 pips from this current market price that we have here, if market moves another 100 pips. So now let me show you guys an example of what I've been explaining. So now, like we said here, look at this side where my arrow is. Where I'm putting this box now. You can see that the current price is 1.27372. Let me bring out my horizontal line. Let me plot it there. Let me change the coordinates to 372. So we just did what we just calculated. You see that line that I put there? Look at where it's showing that pop. So now, or let me go on like a clean chart so that everything does not get, confusing. Let me go to FX-TM. Wow. Price closed at a different market price right here. But the price we had was 1.27372, right? 3372. Okay, good. That's where that look at that yellow zone. Now, when I added it, right? When I added the 100 pips, the new price that we had was what? We had our new price to be 1.29372. So let's go and check it here. Let's do another line showing 1.29372. So 1.29, yeah, 372. You can see I've plotted that line. So that will bring out my price range. I'm going to zoom it now. Okay, now price moved 200 pips rather. Price moved 200 pips. Price moved 200 pips. Look at it. You can see the digits here. We have 198. It's not complete, but it means 200. Do you get? But let me go back and show you the when we moved it to like when we calculated in 100 pips. So wonder, okay, this was when price moved from this price, right? Price moved to from this current price moved to 1.28372, which is this price. So have this in mind. This is where our new 100 pips level is going to be, right? So let's plot it together. 1.28372. Look at it. From this first current price here to this zone, what can we see? Price moved 100 pips, right? Now, when we extend it, as we calculated, price moved 200 pips. So if we move it now to like 300 pips, let's put it down to like 300. Okay. Our new price is going to be 300, 1.2, 1.330372. You can see correlation. You can see how it's moved. See this digit is saying here, it's just telling us price has moved 300 pips. So there's a tool you can use to calculate pips. Look at this here. I have my price range. So on your trading view, you should go and highlight this there. So what I'm going to do right now, this video is going to be cut short. So I'm going to send you a new link and I expect you to join right after I end this video. But before the call gets short, do you guys understand how far and how the pips now calculation is going? How to plot it on your chart?
Network is bad.
But
Can't
are you
even like
understanding?
it's breaking. I don't know if you can hear me. Can you hear me?
Can you hear
Network
you?
is
But you get what I'm saying? You get what I'm teaching?
yeah. Yeah, like your voice is breaking. It's breaking everything.
Oh, okay, because of the network,
Yeah.
you're able to pick up some things like important.
Yeah. Yes.
So you can go like when I you that over you to understand. You get
Okay.
so let me drop this call and send the new link. Yeah, stop share. Let's see. Let me follow me.